Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you love entrepreneurship and investing in real estate, then you are in the right place. Josh is the CEO of Freeland Ventures Real Estate Private Equity and has personally invested in well over 500 properties all across the country. He's also made hundreds of private lender loans and owns over 1,000 units of apartments. Josh is an expert at raising private money for deals, and he prides himself on never having had a boss in his entire adult life. Josh and his team also mentor investors and entrepreneurs from all over the world. He doesn't dream about doing deals. He actually does them, and so do his listeners and students. Now sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So hey, welcome back. This is Josh Cantwell, the host of Accelerated Investor. Thanks so much for joining me, no matter where you are in the world. Welcome to America's #1 real estate investing and entrepreneurship podcast. Today, I am really excited to be with the Chief Product and Technology Officer at Adam Data Solutions. His name is Todd Tita, and Todd helps bring products to market for the really institutional large clients, as well as the on-the-ground, boots-on-the-ground real estate investor. Adam Data is one of the nation's leading providers and aggregators of data relative to the real estate industry, real estate investors, big companies, small companies, mortgage companies, and we're happy to have him to have a conversation around how big data and artificial intelligence is impacting real estate investing around the country. Todd, thanks so much for joining us. How are you?
I'm well. Thanks for having me, Josh.
Yeah, you bet. So Todd, let me just ask you to kind of kick things off. Just tell a little bit our audience a little bit more about Adam Data. What exactly does Adam Data do?
Yeah, great. You teed it up pretty well there, but zooming out a little bit, we collect and curate around 50 to 60 different data sets about the real estate market. And then we organize that into products or data, what we'd call data solutions, that we sell into the real estate market, the investor market, hedge funds, and institutional investors, as you described. And what we're really helping them do is a couple of things. One, helping them in their marketing efforts, so either making smarter decisions about who to market to or what the content of the marketing campaign might be. And then secondly, the second major use case is around risk. So helping them to make decisions around something in their business. That could be entering a particular market, buying a particular house, selling a particular house, maybe underwriting a particular, hard money loan, whatever it might be. But really just risk decisioning and understanding the risk of a particular real estate asset.
Got it. So Todd, tell us a little bit more about, you mentioned 50 different data sets that you guys pull from county records as well as multiple other sources. What are some of the different data sets that you guys are pulling, aggregating, spinning around in your kind of witch's brew, if you will, and then that turns into products based on all these overlays of data? So let's just start by talking about what data are you guys pulling, and then secondly, when that spins around into products, give us an example of some of the products that actually come out of the overlays.
Sure. Yeah, absolutely. So we think of it in four major buckets. The first is information about the property itself. So things like beds, baths, square footage, things that might come off of a tax assessor record where they're collecting very basic information about a property. Sales history, mortgage history of a property. Those are things that might come off of the recording process when you buy or sell a home. Even further, we aggregate MLS listing information, imagery around the property, kind of zooming out from property specific information. We look a lot at neighborhood level data because location. And what we think about there are things like crime, demographics, amenities in the area, and maybe in the form of points of interest, restaurants, things like that. transit areas. And so neighborhoods information is really a core part of that. Schools. The third bucket is we kind of layer on top of that the raw data, if you will, geospatial. So think maps, and that's things like school boundaries, school district boundaries. So what that allows us to do is make decisions around how maybe school quality impacts real estate value.
Which it definitely does, right? Neighborhoods, A, B, C, different types of neighborhoods definitely impacts value, along with quality of schools impacts value big time. That's
right. You can cross a street and be attending a different school or maybe even a different school district and see a 10-15% drop in the value of homes just simply because of that, which is not uncommon. That the fourth bucket, which is really tying into some of the conversation we're going to have around artificial intelligence and big data, is what we would call analytics type of products. And this is where we take all of those other data sets and throw them through the witch's brew and make decisions or derive information out of the other data. Things like what's the value of a home that you can't necessarily intuitively just pick up off of a prior sale, but we'll look at all of our other data and make a empirical decision on what maybe the value of the home is or the equity position of an owner is. School quality ratings that we look at relative to value, et cetera. So that's the four major buckets. They do, as you described, where we make decisions and provide it out in either report format or in many cases just answers to questions rather than just here's all the data.
Yeah, many people may or may not know that Adam Data is the parent company to Realty Track, so they produce products around the ability to just export lists where you can overlay different criteria about motivated sellers, right? You can overlay lists that says the house is vacant or it has a certain percentage of equity, or there's maybe a foreclosure, or there's an out-of-town owner or there's all these different types of data where the owner may live out of the area or not live in the property because there's a forwarding address. There's all these different sets of data. So Realty Track is what many people know initially because just the brand. Right. But other things include reports you guys do and other things that, information that you provide to institutions. Is there anything else that sticks out or any popular products that institutions and hedge funds buy that maybe the regular mom and pop investor is not aware of?
Sure. Yeah, absolutely. So we get a lot of interest from hedge funds around our market analysis. So you mentioned some reports that we do. We'll look at markets from a number of different factors and make decisions on what's the best yield for an investor, what's the best ROI, maybe where the most appreciation is going to happen, or conversely, where a bad market is and where you should get out of. So a lot of hedge funds and institutional investors are keenly interested in that because they're operating on hundreds, if not thousands, of homes within these markets, and they're looking for any signal they can get to make a decision on those markets. So that's very applicable to the smaller investor and the mom and pop investor, if not more so at the home level.
Yeah, because like you said, investing in a B market versus an A market versus a C market, you can get a lot more cash flow in a C market, but property values are going to be lower and you have a tougher time selling that property. And knowing that right out of the gate is a big deal. For very sophisticated, advanced investors, like we know our markets pretty well, but we tend to invest in our own backyards, right? Versus an institutional investor, they may be, their desk is in Wall Street and they're investing in Memphis and Cleveland and St. Louis, and they're investing purely off of the data that you guys are providing and other companies are providing. They don't actually go out and they're not investing in their own backyard, right?
That's right.
They're investing in the high cash flow markets or high equity markets.
Yeah, and that's why we believe there's always going to be an opportunity for multiple angles in investing. Local investors, of which I'm one myself in my home market. You're always going to have an opportunity, and simply because rehab values better, what sales prices are going to be better than somebody operating off of a model. We firmly believe that. I say that as a data person, but I believe it that you can't just simply operate without boots on the ground.
Yeah, with boots on the ground, you may not need to buy a bunch of data because you can get a lot of data just from your local county auditors or county recorder's website. Maybe you use some software and the MLS, and if you're only doing 6 or 10 deals a year, you can just you can literally drive neighborhoods and find out, well, that house sold for 210 and this house is selling for 170. And there's that one over there for sale for 105. That's a deal, right?
That's right.
It's as simple as that versus, big data. My newest and most powerful real estate investing book, The Flip System, is now available. And for a limited time, you can grab your free copy at getflipsystem.com/podcast. Using the same proven principles, secrets, and investing strategies I'm sharing in this book, I've been able to personally close over 750 highly profitable real estate deals over the last 15 years, make over 400 private lender loans, raise over $30 million of private money, and acquire over 2,000 units of apartments. Get my newest book now for free for a limited time at getflipsystem.com/podcast. That's getflipsystem.com/podcast. So Todd, just tell us the difference between what is big data versus artificial intelligence, and how do you define artificial intelligence? What's the difference between the two, and how do they play well together?
Sure. Yeah, there's a simple way to think about this one, and big data is really about the content itself. So information getting generated either through your online browsing behavior, maybe credit card transactions, or in the case of real estate, maybe through a smart home type of thermostat like a Nest. Just the raw information getting collected and stored and organized in a way that makes it consumable. That's just the idea of big data, that there's this increasing volume of it. How do you best organize it? Mm-hmm. Whereas artificial intelligence, on the other hand, is about taking, could be taking data or something that a human maybe does today and building software that operates like that human. Best example of it is something like Alexa or Siri. Those are very much built on artificial intelligence technologies. They sit on top of these giant stores of information that have been collected, the big data part, things like conversations or, prior interactions that Alexa may have had with any consumer. And what they're trying to do is mimic conversational speech on top of this large data set that they've collected over time. So think of, Alexa as the AI underpinned by a lot of content that makes it possible. And that's the big data part.
So Todd, let's talk a little bit more about how is data changing. We have sort of traditional data that we can get from the tax assessor's website or the county recorder's website versus what you call emerging data or changing data, or data that's giving us idea of what the future could look like or what the immediate future has in store for us. So help us understand the difference between traditional data, emerging data, and then we'll talk a little bit more about how this is impacting the market.
Right. Yeah, and I think it helps to use an example here, and there's a couple on this slide that hit on it. You think about historical knowledge investors had about a property. It was things like, when did it sell? Who bought it? How much did it sell for, et cetera. What investors now have access to and are starting to get access to is things like energy efficiency. How efficient is the actual house? What the operating costs might be, other things like the actual age of some of the HVAC machines or an FAU, how old are those or how efficient are those? Those are all data points that are getting enabled by some of the new collection that's out there. So you think about a smart thermostat like a Nest, that's collecting efficiency data where it might look at two very similar homes and one whose air conditioner is running 24/7 to maintain 72-degree temperatures in Phoenix in the summer, whereas another one's, maybe only on for 18 hours a day. Different operating cost structure for that, property you might be looking at. Similarly, in neighborhood information, everybody's always had info on, what are the basic demographics of an area. What we're starting to see is a lot more slicing and dicing of neighborhoods, down to the home level, where you can look at, who that buyer in that home is, who the lookalike buyer might be. I'm thinking of the sales side more than anything here, but who the lookalike might be, and they may live in a area, but they have the exact needs and wants, and data is enabling you to kind of find those guys now. So it's really about this data that didn't used to be available and helping you make smarter decisions.
That's fantastic. So how does then AI overlay over top of that to really bring this information to the public, bring it to hedge funds, institutions? Tell us a little bit more about where to go in the future, right?
Yep.
And forecast based on, hey, like this particular city looks to be a profitable city to be investing in maybe in the next 2 to 5 to 10 years. And also within that city, potentially, are there neighborhoods, are there like micro cities or micro areas where the analytics are telling us, like, go here, forecast is going to tell us this is an emerging area?
Sure. Yeah, and that's a great example of analytics playing a role in, decision making. These are some of the areas on this slide that we see AI having meaningful impact today. Candidly, a lot of AI, not just in real estate, but just generally, is still in the R&D phases. You're not seeing a lot of AI out in day-to-day production, use, beyond the Alexas and Siri examples I gave earlier. A lot of it's sitting in the research labs, but these are areas, these 6 points I've listed here are real world areas that AI is impacting real estate. We see a lot of examples of this. We see a lot of new companies, which we're going to talk about in a minute, that are leveraging this kind of technology to, drive better engagement for their customers. We talked about the smart home example. You mentioned forecasting of markets. We see hedge funds regularly building AI-based models to do micro forecasting, and their buy-sell decisions at extremely granular levels. New test scores are coming in every year for maybe school qualities. They can find or predict how that might impact home values, a year or two before they actually show up. So things like that are real world examples, but I would caution the audience to realize that a lot of AI is still in the R&D phases, and there's a lot left to come out. Exciting stuff, certainly.
And so I'm interested in seeing things like Zillow, right, is now saying we're going to go buy 100,000 houses this year. There actually are buying properties and basically flipping them. You got companies like OfferPad that are out making offers. You got iBuyer. You've got these large institutional buyers, and they're not doing a lot of buying low value add investments of doing big rehabs and then putting a new product back on the market. They're, I believe, and you can correct me if I'm wrong, but they're using AI to determine, like, this is a property or this is an area that seems to be like a value add play where they can just buy low, maybe not do a ton of improvements, but there's some need to resell, and they're able to resell the property without really doing a whole lot to it. I mean, I don't think Zillow is going to be rehabbing 100,000 homes. I could be wrong, but they're probably making some analytics play very similar to the way a stockbroker simply sees a stock that's on sale. They buy that stock, they hold it, and then they sell it in the future because now the market has realized that the stock actually should be worth more. That's the way I kind of feel it. I'm not sure if any of that is accurate, but that's the way it feels to me. So I'd like you to just comment on that. Like, how is this new analytics, this new business of big data and AI creating these new tech companies that are making these large decisions?
Yeah, and the iBuyer market is absolutely one that's leveraging technology more than most, certainly more than the traditional say relocation companies or brokerages that are out there. Yeah, and you're right. The iBuyer companies have a variety of different business models, some of which are, intended to be large scale, quick turn, large scale being high volume relative to maybe a 100 to 200 home flipper. But they're doing it on extremely thin margins. And you're right, not making major rehab work. So there's a formula, they know what the formula is, and they're sticking very much within that box, and not taking risks on, nuanced properties or challenging properties, or, certainly something with a major rehab issue like a slab, cracked slab or something. They're buying a very, narrow, traditional 3-and-3, in Phoenix. That's no more than 15 to 20 years old. And that's what many of them are buying, is that formula. We think about Zillow. Zillow has come out and said something slightly different than the other ones. And I think it's a function of them having so much consumer eyeballs. And it's that they believe they're a market maker, in the consumer real estate space. So, when you use this stock market example, where, a stockbroker wants to sell a stock, or a consumer wants to sell a stock, oftentimes somebody else is buying that buying that stock and then putting it into the general market for repurchase by some other investor. It's very often very quick in the stock market. It happens instantaneously.
Right.
But that's the concept of the market maker. It creates some liquidity. And Zillow has, unlike the other iBuyers that are out there, come out and, claim that that's really the function, is to create some liquidity for sellers. Our sense of it is, we like the business model. They've raised business models of all of these companies. I'm impressed in the sense of them being able to take some of this technology and apply it to a real use case. We believe it will be a part of the market. We definitely don't see, a significant, certainly not a majority market share for something like this. But there is a segment of the market that wants a little bit more liquidity when you're selling.
Right.
And these iBuyers, ideally offer some of that. The other side to it, and I'll use Zillow and Redfin and more recently Realogy, and KW, by offering this as well, creates a lead gen opportunity. So there are a lot of sellers who go on to the sites and, maybe the offer's not what they want, from the iBuyers, because they are buying at a discount. But it creates a lead opportunity for, brokerages. And so we're seeing that it's also a lead gen play for some of the companies that are out there.
Yeah, I believe it's probably more of a lead gen play than anything, in my personal opinion, generating traffic and eyeballs. Because for years, realtors have said, there's been a different marketing hooks that said, we'll sell your house in 45 days or we'll buy it.
That's
and
right.
We'll buy it means we'll buy it, but we're going to buy it at 65 cents on the dollar, right? So Zillow is basically going out saying, we'll make offers on your house. And all of a sudden now the seller is engaged with Zillow in some capacity to potentially sell and purchase the home. But the offer might be, again, at a number that's too far of a discount, but the seller is now engaged with Zillow. Zillow now can then sell off that lead to one of their premier agents that advertise on their platform, and it becomes a listing, right?
Yep.
I mean, let's be honest here. Still, well over 80% of all real estate that's done in the United States is done essentially by mom and pops. If they're investors and there's buyers and sellers, they're done by mom and pops that do just a few transactions a year. Even the huge rental companies that own like American Homes for Rent and these massive institutions, they only own about 1 or 2 or 3% of the overall market, even though the Blackstones of the world and these big massive institutions that own 40,000, 50,000 doors, they get a lot of publicity and they get market share by being on the front covers of magazines. They're really not that big of a player when it comes to the overall market, because they only are playing in 1, 2, 3% of it. So even if Zillow does 100,000, it says they're going to buy 100,000 houses, it's again going to be a relatively small percentage of the overall market. So it looks sexy, but it's not really impacting what we're doing as local investors, right?
That you hit it on the head. That's my take too. You're saying 100,000 homes. That's spread against a year, and it's spread against the whole U.S. 5 million homes a year on average selling. So you think about the math there. It is a small piece of the pie. The thing I'd caution, and we talk to a lot of agents out there, is it's another channel that's out there. Don't be afraid of it, but also don't ignore it. Don't ignore it. I talk to a lot of agents who open doors in their market, and say the Inland Empire here in Southern California. They now have 70, 80 listings in their app, and then in the Empire. Not so much as an owner are they impactful, but a lot of brokerages would love to have 60 to 80 listings in a county. And so there's that dynamic of competing with agents and brokers that I think we don't want to discount.
Yeah, there's definitely new technology where there are companies buying properties, the iBuyers, the Zillows, they are buying some. But for the most part, my take on it is that it seems like it's a new way. It's a new way for old companies like Keller Williams, like Zillow, like Remax to get more eyeballs, to get more market share. Right?
I would agree with you. Yeah, I think it's a reaction. The KWs, the Remaxes, and the Realogies in particular. There's a lot of pressure from their agent base. They're getting their agents stolen by Compass and EXP. Just writing large checks. And so they need to do something to respond to. It's a retention play in a lot of ways, in my mind, as is the tech investment that they're making, et cetera. So, yeah, absolutely.
Very cool. So what are some of the coming trends? What are some things you see regarding data, AI, just investing, business models? What are some of the things that you anticipate seeing in the next maybe 6 months to 5 years? Based on some of the stuff you see as an insider in dealing with big data and working with big institutions?
Yeah, absolutely. I think of it in the three buckets you see here. On the data side, one trend we're really watching is this question of smart home. How impactful that is going to be on, insurance premiums, on sale prices, on, repair requests, something as basic as that. How that data collection that's happening around smart homes could impact any of those areas, positively, as a positive factor or a negative factor. On the AI front, I think the most interesting one, candidly, is that, hyper-local market segmentation. People getting smarter and smarter about, the slicing and dicing and nuancing of a property. Not excited necessarily for the fact that we couldn't do it before, because, I would argue appraisers are pretty darn good at that, especially ones that do repeat appraisals in an area and know areas. But appraisals are $600 to $1,000 in a lot of markets.
Right.
So see the ability to bring that down market, pre-offer, as being a very interesting scenario, and bringing a little bit of the back end process up front at a lower cost.
Todd, I think it's interesting when you bring up appraisers, and again, I know appraisers do a fantastic job of really dialing into a market, but for $600 to $1,000 per appraisal, if
expensive.
Data can be, again, thrown into the witch's brew and segmented around and pull really relevant multi-layered data out, a lot of times you can get these kind of reports or get this data for a small subscription fee, $30, $40, $50 per month, or sometimes even cheaper, or sometimes you can pull an entire list out or a report out for, $10, $50, $200, get a lot of that same information, and you can get it at scale, you can get it at volume, you can get it in multiple counties, multiple states, multiple cities. Right. And so you're really flipping the whole potential appraisal market on its head, because the value of that appraiser on your local deal is great, and you kind of need that to get across the financing goal line with your local bank. You got to have an appraisal.
Right.
But for the same dollars, $1,000, you can get amazing information about your market and motivated seller lists and information about the marketplace. So that could be a potential real change in the future.
Absolutely. Yeah, even if it just brings prices down or moves the step up to pre-offer, I think that's great, and it's huge use of the data. You're right, and we're one of those companies that offers. You mentioned Realty Track. That is our consumer website where we offer some of this data, for $50 a month. Pretty unlimited access, and a lot of investors. That's enough to get them into to filter down on deals, and that's the whole point. I am not of the perspective, despite my role and what I do every day, I'm not of the perspective that I'm ever going to replace my human decision making that I make on my deals at the end of the day. But I want to cut through a lot of noise in the process and bring efficiency to how I. So if I want to look at 1 or 2 deals a week that is meaningful, that's what I want to achieve rather than looking at 100 listings.
And I think with the market being so competitive now and things being so good for so long, you have so many people now looking at real estate, whether it's single family, multifamily, commercial. You do have to look at a lot more deal flow to pick the deals that you want, right? We might look at 100 apartment complexes and put LOIs out on 10 of them and hopefully buy one, right? Or you might make 30 offers on a residential property to get 1 or 2 good deals. So you've got to process a lot of information up here at the top of the funnel to have it sift and sort through all that stuff to get down to 1 or 2 or 3 really good deals that you want to buy, and you're really committed to adding to your portfolio. Versus in the past, like, well, there's 20 deals on the MLS. I'm going to make offers on 10. I'm sure I'll get 1 or 2. You just went right to the MLS and skipped all this sifting and sorting, right?
Yep.
And now that there are so many more institutions that are tech savvy and data savvy and real estate savvy, that really isn't going to change. I don't think the competition in the market is going to go down. Even if there's a recession, which we expect to see sometime in the next 2 years or less, I don't think all of a sudden there's a bunch of people going to exit the market. I think people are waiting for a recession, dying for a recession to see prices go down. So I think there's going to be a lot of competition in real estate for a long time because of all the data and the technology and the AI that's been introduced.
And it's an arms race. I mean, I would argue it's an arms race. There's a lot of dollars being invested in this space. $3.5 billion last year. 2.5 the year before. In all these different business models, and that money is turning into these types of tools we're talking about.
Right. Yep. Fantastic. So future business models, what do you see as far as potential changes there?
Yeah, I'm mostly interested in tracking a couple things. I point out the first two bullet points on this slide are probably my most interesting ones that I keep an eye on. And it's the idea of private listing clubs. They're not new. The technology and certainly the business model hasn't been around, or has been around, for years. You're just seeing a little bit more activity and some funding into that space again. So I sort of view it as it's another channel, another distribution channel for agents to work within and investors. So I'm interested in that one. I hope they get traction and start competing, if you will, with the MLS consolidation that's happening nationally. And then the second one is an efficiency play to me and really meeting the consumer need. And it's the, just more proliferation of remote showings, virtual showings. I will reference this as it relates to iBuyers too. It's a lot easier to do this when the home's vacant. And that's that iBuyer, sort of brings to the table with that liquidity that they're offering and the market making function that they're offering. It solves a specific need, on some subset of listings, and I think you'll see remote showings become much more prevalent in that situation. Home builders are already doing it. Probably a third of all home builders are doing it with their models now. 24/7 showings, sales office not open, etc. And I think you're going to see it in the resale side as well. But again, I think, like I said, it's easier for a vacant home. But we're hoping that it takes off further from where it's been.
Right. Yep. I like that too. Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com/podcast. So, opportunities, like what does this look like going forward for the, more of the residential investor or small balance commercial investor? It could be new, intermediate, advanced. I mean, some of our students and clients have hundreds and hundreds of units of single family rentals. I mean, some of my friends and I have over 2,000, 3,000 units of apartments. Right. But I would still consider us generally, we're not institutional. We'd still fall into kind of the maybe professional, but mom and pop, if you will. Sure. What does it mean for guys like us? The good, the bad? What does this look like going forward?
Yeah, I'll start with the bad as it relates to everything we've been talking about. And it's something I said earlier. Most of this new tech is still being proven. It's a lot of paper concept. There's things that are in the market today that are creating meaningful value and opportunity. But I would argue most AI, most of this, analytics technology is still being proven, and it needs to show the market that it can succeed. Mm-hmm. One of the results of that is that there's a lot of vendors out there. There's been a lot of funding thrown around. You saw the slide earlier on. Oh yeah. Something as simple as a brokerage model, a fixed fee brokerage model. There's probably 4 logos on that slide of fixed fee brokerage models, and several have come and gone. So picking partners and vendors as an investor is, important to be cautious. Right. Don't walk into anything long term would be my, suggestion. The other thing I'd mention is, and this isn't so much, geared towards an investor question, but maybe more your partners. They're all struggling to find people that understand this stuff and can make use of it. And so, it's a talent market is pretty tight. We try to hire quite often in this space, and it's, we're competing with the Zillows and Facebooks and, Googles of the world. And right. As much as I like to think I have good recruiting abilities, it's not easy to compete against those guys. And then on the good side, you hit this one. The data is becoming much more available, cheaper. Ready access. I'd say embrace that. Look for tools that are out there and data that are out there. And there's a lot of different options for pretty much everything you might need. Whether it be a seller marketing list fragmentation tool or segmentation tool, or a direct marketing list itself. There's just a lot of options. We're one of them. We sell many of these tools, but there are a lot of them out there. So that's a good thing. Right. It creates price opportunity, but it creates also, you can test. And then, this is again probably more geared towards the agent side of the equation. I think consumers are just as freaked out about all this. Buyers and sellers as an investor are all freaked out about a lot of these different technologies. So being savvy about them and being knowledgeable of them can help you differentiate.
Absolutely, yeah. We've been buying data. So I founded a software company back in 2006. Today it's called Accelerated Investor Office, and we buy data and part of it from you guys, and we all sift and sort it into our software, and it gets repackaged up and overlaid on top of all different kinds of other stuff. And we add all of that, and people can look at properties, based on Google Maps, and they can find out beds, baths, and square footage, and they can find out how much equity is in the property. If there's a divorce situation, a bankruptcy, it's vacant, all these various things come together, and they can get amazing tools and apps inside the software. And 10 years ago when I founded the company, it was hard. It was hard to find all this data. Today, it's so much easier, so much better to pull all the data from. And there's price compression coming down on the cost of that data, which allows us to offer that on a subscription model out to our customers at an even a cheaper price. We're also seeing more competition doing the same thing that we do. So you've just really got to be good. And at the end of the day, it also comes down to relationships, right? So it comes down to when you're dealing directly with the consumer like we do, or the investor like we do, or the borrower like we do, there's a lot of people that lend like we do. There's a lot of people that have software like we do. A lot of people provide coaching services like we do. A lot of companies that have data, Todd, like you guys do. Comes down to relationships. So as technology makes our life quote unquote easier, it's supposed to make our life less complicated, although sometimes it feels like the opposite. What this business really comes down to is relationships, because slicing and dicing the data is one thing, getting lists is one thing, but then dealing real estate is still a very human interactive business. Title companies, realtors, funding sources, whether it's residential or commercial, all need to work together. And that's the one thing that machines haven't figured out yet, and probably won't figure out for a long, long, long time, is how to take all the data, make it work to actually get a transaction from A to Z.
Yeah,
right?
Absolutely.
So real estate is still real estate, doing residential and commercial deals. This data just is making our lives more options, more choices, which means we've got to be really good at making good decisions about who we want to partner with and who we create relationships with. That's ultimately how I see this all kind of, finalizing out. At the end of the day, it's about the relationship. That's how you take the data and make it work for you to actually make money.
Absolutely.
So Todd, I appreciate you being on with us. I would love to have you back again like we always have over the past several years. We have an amazing relationship with Adam Data. If our audience and our podcast listeners or YouTube watchers want to learn more about your company, use your services, what are some different resources that you guys have access to that they can get their hands on?
Yeah, I'd recommend a couple things. One, our main website, which you see listed here on the slide. That's where you go initially, and you'll see a lot of information about the data and our solutions that we offer. I definitely would recommend investors take a look at our press room, which is the news tab there. We have a lot of reports. We put out, data every Friday about, something interesting in real estate, and it could be market trends. Recent one we did was, how does a grocery proximity to a particular grocery chains impact the value of a home?
Wow, really? All the way down to grocery stores, huh?
Yeah. So in this case,
did you fragment that out, Todd, based on the actual grocery brand, like Myers versus Giant Eagle versus Kroger?
Yeah, we're in different parts of the U.S., I think, because we looked at, but yes, we looked at the top, call it 50 different brands, and it turns out that Trader Joe's, which is a West Coast chain, East Coast presence, has huge correlation to home price appreciation.
Really? Wow! Yeah. How about that?
More so than Whole Foods, which was quite surprising when we did it. So,
wow!
I think Whole Foods is only in the areas where it's whole wallet, right? But Trader Joe's, which is not the most expensive store, but definitely considered entry level luxury, was a great place to buy a house.
Whole Foods, whole wallet. I like that. That's great.
But so that's an example of a report, and we do those once a month, like these larger reports once a month on our website. You can subscribe to our newsletters where we'll put out kind of interesting data points.
To my audience, I highly recommend it. The newsroom is huge. I've been featured in a number of their monthly newsletters that they put out, which has been really fun to be a part of. But even outside of me being in there, I read that stuff. I look at it all the time. I mean, our lending company, our private equity fund that I run, we look at that data to see what's going on in different markets. What are the best rental markets for buy, fix, and rent? What are the great markets for buy, fix, and flip? And we rely on that data. And there's new stuff that comes out every Friday. So you can really spend, part of your Friday and weekend reading and really learning about your market and what's going on across the country. So an amazing resource there as well. And then, Todd, if anybody wanted to reach out and contact you guys for more information, whether it's buying data, buying lists, Realty Track, they can also go to your website there as well, right?
That's right. Yeah, there's a link to Realty Track right on the website. There's a link to our lists our marketing list product right on the website. And then there's a contact us form if you want to talk more. Happy to come back as well, Josh, on another day, and we'll talk some more about the market because I can tell you're super passionate. I'm super passionate about this stuff, and we got to keep an eye on it.
Yeah, you bet. Guys, listen, if you're looking for a list to use for motivated sellers, so those of you guys are looking for more wholesale deals or rental properties or fix and flips or buying keeps, highly recommend their tools because you can actually go source a list, overlay the data right on their website, export the list, and then just pay for that list one time. You don't have to subscribe or pay a monthly fee and do that for years and years or make any kind of long-term commitments. So if you're looking to just get your hands on, let's say, a list of 1,000 motivated sellers in your own backyard that are vacant with equity, that have an absentee owner, it's an amazing source that you can go and just buy that list and then market to that list for the next couple of months. And I'm sure you'll get some deal flow from that. So it's a really great resource. We've used it many, many, many times. Also check out their adamdata.com/newsroom. Fantastic resource there. So if you've enjoyed our interview with Todd, definitely leave us ratings, leave us reviews, leave us comments. We'll definitely have Todd and some other of his colleagues from Adam Data back on in the future. Todd, any kind of final parting shots, words of advice, or resources for our audience?
Yeah, no, I think just everything we've talked about is just keep an eye on the market. It's shifting daily. Take our newsroom and follow that. We put a lot out there. You obviously put a lot of content out, Josh. We and your tool do amazing things for your users. Use them. That'd be my parting thoughts is use the content, use the tools that are available.
Fantastic.
Yeah, and thanks for having me.
You bet, Todd. Anytime. We'll definitely have you back on. Look forward to seeing more of your content and reports that come out on trends in the marketplace. Thanks so much for joining us.
You've been listening to Josh Cantwell and the Accelerated Investor Podcast. Leave a comment on our iTunes channel and let us know what you want to learn next or who you'd like Josh to interview. While you're there, give us a 5-star rating and make sure to subscribe so you can be the first to hear new episodes. Follow Josh Cantwell and his companies, Strategic Real Estate Coach and Freeland Ventures, on all social media platforms now, and stay up to date on new training and investment opportunities. To start your journey toward the lifestyle you've always dreamed of, apply for coaching at joshcantwellcoaching.com.